Hey, it's Mac with PriceActionTradingSystem.com, and it's Friday, February the 8th. This will be our chart lesson for today. And we spent the majority of the day in this basically a 3-point range. And I like these kind of days. They're fairly difficult for newer traders or inexperienced traders, but I like these kind of days because they're so predictable. You just buy the lows and you sell the highs, and you see what would have happened every time if you bought the lows or sold the highs. And I didn't mark all of them, and I'll explain that in a minute, and we'll go over it. Not a lot of entries today. And I notice somebody asked me if I would color the circles. They said they couldn't see the colors of just the line, the circles, so I colored the interior, and so hopefully that if you got any feedback on that, send it to me. I don't want to mess it up for all the rest for one person, but if nobody has a problem with them being colored in the interior of them colored, I'll be happy to do it that way. So just give me some feedback. Let me know what you think, and we'll go with what the majority wants. But let's talk about the trades. There were a couple of good moves if you were here early. But you had to be here early, because if you didn't get here early, you didn't get any part of this. Even if you were here at the open, you could have gotten in on this trade. We'll talk about it. It's a little more aggressive, but still a good trade. Let's talk about, let's just start down here with trade one. And actually, before we do that, we had a channel going up here, a tighter channel. And again, as you notice, I was able to draw these lines off these highs right here. And so that made me suspect that we maybe had another line down here. And I'm thinking that maybe we did. Let's just see before we close if we don't make a retest of the high. This could be good enough for a retest. It's two measured legs up to a double top. And sometimes that's all you get. So we really could have already had a retest. But generally you're going to get a new high on a pretty good move. So we'll see if we get that before. We'll see where we're at by the time I finish the video. I doubt it's going to take me 30 minutes today, and there's still about 25, almost 30 minutes left in the trading day, so we may not figure that one out before we end the video, but we'll see. But when we opened up this morning, this should have been obvious. This was a trading range, and your overnight high is up here, your overnight lows here. We'd already tested this twice, so you got a double bottom down here, and this was the second test of the original low. And remember that whenever the market tries something twice, whenever it tests something twice and fails, it usually goes further in the other direction. And notice too that we traded up into this range, and so that gives you a long bias as well. So you want to be trying to buy every time prices come down here. And if you're a really aggressive trader, you probably just want to drop a limit order right here and buy it. But if you're not, when you got a bar this is a fairly bullish bar here. It's not they still closed a couple of ticks off, but that's due to it being right at the EMA. There's still plenty of room to scalp out before getting to these highs up here. So it's worth risking going long there. And you can see it moved on up rather quickly, and where did it find its real resistance? Right there at that overnight high where I'm always talking about. But look how quickly it went on through. And remember what I told you, you want to see it come back and test it as support and hold. And look how it tested that to the tick and held and closed. So there's another entry right there, basically a second entry long. And so you might have been thinking, hey, we got one leg. Actually, that would be it right there. So where's the second leg going? Imagine that, exactly to that point before you really got a correction. And that's kind of the way the market will work. It moves in twos, so you got to remember that. And but I drew this one in green. It's a little more aggressive. There's some overlap here. This one didn't close exactly on its high. So it was an aggressive trade, but it's a breakout pullback long, so it fits our criteria for your more aggressive traders. So you could have taken that, and that was really the only place to get in this move if you didn't get in down here. And so I'm hoping that most of you were able to, if you were trading then, to buy this strong low here and just keep a tight stop, and that way you get a chance to get in on this. Do we know that this is, I got some questions today, some emails that are asking me basically, did I know, how did I know prices were going to go up here? Well, you don't know, and that's why we hold a runner. I was just as surprised as everybody else that this moved up. And let's just say you did enter down here on a limit order, which I used a limit order, and I dropped it one tick above those closes. And, call it luck, call it whatever you want, but I was long from one tick from the bottom. Actually 2 ticks. I take that back because the lows were here. So I got long 2 ticks from the very bottom of the day. Do I know this is going to do this? No. But that's why I scalp out and hold a runner and move my stop to break even. And this thing never looked back, and it just keeps going up. So a lot of times if it was a strong range day, I might exit right here. But really the smart thing to do is wait till you start to get some congestion and then move your stop up to 1 tick below that low. And normally what I like to do is wait on the second one. So in other words, your stop stays here. Even though you don't get a tick lower here, this is still a correction. If you went to a smaller chart, you would see a correction there. That red bar, there's a correction in there. And it's not a very big one, but it's just what it is. We hit resistance right here at this high, and it takes a little while to work through it. But then when you get this second correction, that's where your stop will go 1 tick below the bottom of that correction. But even if you'd have moved it up below this one, it never would have got triggered. But then you move it up to 1 tick below that one once it gets up here and makes this correction. And then once that correction goes, then you move it up here to this one. And you just keep moving it up. And that way you wouldn't have got stopped out until this low right here. And then it turned and finally made a lower low. And that would have been where you got stopped out. So that's how I would have handled that. Either that or I just would have exited on a limit order somewhere in here. You wouldn't have had this line here yet. So this wouldn't have been here. There's no way to know that. And you wouldn't have had, you may not have even had this line because there was no way really to know where this was until we got that swing right there. You might have drawn a line from here to here, and that might have given you your first break and then a move to a new high, and then you got a double top. But notice that we made another new high, and that could have been, there's nothing wrong with that line. That is at least a temporary trend line. But once we got this line across these tops here that held a couple of different times, I felt pretty confident that that this line had some kind of value. But I also drew this one off these first couple of swings here. And when we started to correct, and I drug that down thinking that's got some value, and you can see we bounced right off of that line. And so I believe this channel is valid. Actually, I probably should have made this a lighter one. I just believe this is a channel within a channel, kind of like we had yesterday. We seem to be seeing more of that lately. And you see we're still trying to work higher. We're still in this trading range over here. And you could have bought that right there, a nice little tick lower that turned, closed on. You could have bought it in either place, and you just had another scalp there. But anyway, let's move on. We've covered these two trades. Here's your next one. Guess what this one is? A two-legged pullback to the EMA, or the trend line. It's basically the trend line in this case, not the EMA. We didn't get there. So it's a second entry long. But notice what else. There's another reason to enter here. Notice all this overlap, these matching lows right across here, and we broke below. So it's a failed break lower. It's a second entry long. It's a two-legged pullback. Every reason to be thinking long right there. And look, it was an easy scalp. So you got to pay attention to that kind of stuff. So there's multiple reasons to enter that trade right there, more than one. And it's a nice, easy scalp. No big runners. It came back really quick and got the stop, and then it made another run to another new high. But in my opinion, this was the first break of this little channel right here, and then it was a two-legged move up to a new high, and then we've gone into our correction time, And really we're just coming back to the other side of this channel, but we broke it right here. So we've made one leg up. Now we've had a pullback, and let's see if we don't get another leg before the market closes that looks like that. And maybe goes a little higher, makes a new high, but then you still got, I mean, we've already had enough correction time, because really from noon until 2 o'clock, that's all the volume we had, from noon to 2 o'clock. And that's nothing, because all of these bars formed in really about the same amount of time, and then you get this amount. So there's no volume going on in here. There's nobody. It's Friday. Everybody's gone. Everybody quit. All the movement was in the morning. They made their money, and since then it's just been the few leftovers out there trading, fighting, trying to going nowhere. So that's what's going on. But anyway, we got a break of the trend line here. You might have gotten tricked into going short here, but look what this is. You got 1, 2, 3, 4, 5, 6, 7, 8 bars overlapping, multiple dojis. So you just had a break of a trend line. You're expecting to go higher, but you got to have a good setup. And if you did get tricked right here, you probably wanted to exit. You might have held on simply because we're in all this overlap, but I never would have entered there. There's no decent entry there on my chart. This would have been the place to think about entering, but notice it never triggered, and then you get all the overlap. And so when that one triggered up, it is a second entry long, but there's just too much overlap there, in my opinion, after making that double top. And but if you got tricked there, when this bar reversed and turned down like that, I would have exited and taken you would have lost a tick or two. But then guess what? You could have gone long here, because notice those matching lows. We had one tick lower. So you got a little trap there. You got a double bottom. You got a failed second entry short. And so there's another trap there. So that was the place to go long, hoping when you were going to run to the new high. So finally you had a decent setup. So you got to be careful. Usually when you get all this overlap, it's just not worth entering, because what happens, and let me show you this in real time, because prices break out and they snap, and you see you're coming up here, you're still going higher, and then suddenly you break the trend line. That's a very bearish bar. You don't want to be going short there because you're so close to the EMA, plus the trend is still up. That's the first break of the trend line, and then you got a doji. So no entry there. Another little doji. You might have considered entering long here, but with all this overlap, you got to wait on a little better setup than that. And notice it keeps going lower. We make another bar lower. Still no reason to go short, no reason to go long. We're still looking for longs, really, so no reason to go short. Now you got a nice bullish bar. So a break above that, but then you're so close to the double top, that's a very questionable bar. It's very bullish though, so there are a lot of reasons to think, hey, if we break above this, but what I would have probably done is if we broke above that, I'd probably drop a limit order maybe halfway back in here closer to the EMA and hope it comes back and then goes back up and I can get out before we get to these highs. So that's what I would have been thinking. But it never fulfills, and guess what? It turns down right there. We're still not looking for shorts, not with everything above the EMA, that kind of thing. So it goes lower. Guess what? That ends as a doji. Now you got even more overlapping bars. You don't want to enter above that. No way. Then all of a sudden you get another inside bar. So now you got two overlapping bars. Both of them are doji. You definitely don't want to enter above that. And there it goes. So you got a nice bullish bar. So you might have thought, hey, I might could enter here, but look at all the overlap in the dojis and all now. And what happens? Normally prices will break up higher or break lower and snap right back. And look what happens. It breaks up there and it snaps right back. And now you got a second entry short, but we're not looking for shorts. Remember, there's your EMA. Everything's above it. You got all these matching lows across here. No way I'm going short there. But guess what? I might look for a long now if we get a trap, because now we got a second entry short. And guess what? There it is. And look at that little doji. That's where you want to consider going long right there, because if prices turn back up and go above that, now you got a chance to get long at a double bottom. All this overlap, these matching lows, a single tick lower that probably trapped a bunch of shorts. There's enough room now to get out before getting to the high. Lots of reasons to think long. And look, there it goes. Hey, that looks pretty good. And there it goes again. Now, if this ball right here would have ticked a tick higher and started turning back down and closed back down, I probably would have exited. But there it goes. And there it goes. You see it breaks out. But now's when you got to be thinking about, hey, where am I going to exit here? Just let it keep going as long as it's going. Oops. Look at that. We broke out of the top of that double top, and now it's coming back. If I hadn't already exited my runner, I would definitely exit right here if it ticks a tick lower. Boom, there it is, comes back. And now we're right back in the range, in this area again, all this overlap. There's another doji. No. See what happens when it broke out. It comes back in. You got these three overlapping. It ticks one tick higher. Just traps people at the highs. There's another one. Now you really got all this overlap. There's another one. There's no longs or shorts here. If anything, you got to be thinking we're going to come back down to this low side. Get a little break lower, nothing going on. Hey, there you go. We break out and we're coming down. Another doji. No reason to be entering there. Still coming lower, but there's no setups. And then suddenly there's your trend line that we got off the top and drug down. So now you got to be thinking, hey, I might want to go long right here. And then all of a sudden you get a bullish reversal bar. That's a good place to go long. It hesitates a second, but then takes on off the next bar. And now we're looking to see if we come back up here. We should come back up here, and you might even want to go ahead and have an exit order here, but if not, you want to be paying close attention to any runners. Now that hesitates a little bit. You might have even thought about exiting right there, especially when it broke higher right there and got hung up, but it's still working kind of higher. And this was a second entry long, because here's your first entry and it comes on down. There's your first. So this is second entry. So you might have thought about exiting this with what you could get, but it's continuing to work on up. Definitely when you got in these dojis, you might think about exiting, but it worked its way on higher, and it eventually would have got enough ticks to get you out, and then it pulls back to the line again. And guess what? No, there's no setup there, so you're not going long. Ooh, it breaks on down, and guess what? It tests this low right here. You might have thought about going long right here, but that's not a really good setup. You got two overlapping bars. This one's really a doji, and it would have worked, I believe. 15.12.50. It went to 13.50, but it never would have got your stop. So it would have worked, but it's not a very good setup. And then notice we turn back down, and then we get this second entry long. Now I'd be thinking more about going long. And there it goes. And then, of course, now you get another doji. So it broke above that. So you might have thought about exiting that with a tick or two. And there was another chance to go long right there. But again, you don't want to take it this close to those highs. And you see, I would have exited this right in here. No reason to stay with that trade. Once you actually, let me back up here. Let me get this out of the way so you can see. But once if I entered here, as soon as I saw that bar right there, I would have thought seriously about exiting, just like we talked about on this other one over here, because it's not a good sign. This should have gone on up. There's you another chance, and then it ends as another doji. You better bet I'm getting out right here while I can get a tick or two. And then it ticked higher. So now you got all this overlap, and guess what? It breaks out and snaps right back. You might have even thought about going short here, but again, there's a chance it's going to break down and snap back again. And that's exactly what happens. And then now it's working higher again. You don't want to be going long there either, because that's right at the highs where you've been turning down every time. And then look, there's a big bearish bar again. So you might have considered short here. It's really late in the day. I didn't mark that one, but you might have considered short right there. And see, once it entered the doji, I mean, again, these bars right here, it took it over 2 hours to form all those bars. So really, once this failed right here, I would have, you don't want to enter anymore right in there. It's not worth it. There's not enough volume. There's not enough movement. And you see it would have, there's a nice bearish reversal bar there. And if you're going to trade this, that's the way you do it, off that top of that range. And you see it would have worked out because it does come all the way back down. But I wouldn't be messing with this. I wouldn't be trading up in here. This was the last trade I would have considered taking. And then, of course, we talked about what I would have done here, set up a chance to go long right there, easy scalp, and you could have ridden it all the way back to the high or getting pretty close to the high. But now you go into all this overlap, I would have exited here. When you couldn't get above this, I would have exited, because now maybe the range has dropped down to here. That's what it looks like. See how we got more touches across there at that level now? So, and of course it's, it's 10 minutes till market closes now. So hopefully that helps going through it bar by bar. You want to see generally what you want to see is the nice reversal bars. Like this is a reversal bar. We're at a high, and look how it opens up here, trades, and then closes all the way down on its low. That's a nice reversal bar. There's a perfect one right there. There's those lows. Notice that it closed in there. It opened there, traded down, turned up and closed inside there, and nothing closed outside that line. That's a nice reversal bar, easy scalp. There weren't a lot of reversal bars today, really, but that's what they look like. That's kind of one right there. If that would have closed on its high, that would have been an even nicer setup. And you see how it hesitated. It took a little while to work on through. But my guess is that's because that wasn't a really nice looking bar, and some people were hesitant. But once it broke above that, they all started piling in. So that was really about it today. The only way to trade this range is to sell the highs and buy the lows, and you got to get in really close, because at first the range was way up here. At one time the range was way up here, and then it kind of moved up there. But then before it's all over, it's way back. It's down here a couple of points. So you got to find a way to get in really close to the top of the line, as close as possible. And really the only way to do that consistently is with a limit order. And it's a little bit more dangerous to enter with a limit order. One tick in front of this, you would have entered right here. If you just use this as an example, this was the last one. Your entry would have been 1375. And so you've got you could exit this with 2 points if you got out right here. If it goes in, who knows if it's going to go any lower this late in the day. But generally, that's the only way to trade this. And you can see what happened if you'd have bought it every time it came down here, or sold it every time it came to the top. You'd have made money. And my guess is this one will work out the same if the market doesn't close first. Although I am still looking for a new high right here. So I don't, it's a good enough reason not to take that short. But that's really the only way to trade that, and that was most of the day right there. So it was pretty hard going today. And but anyway, I'm going to wrap this thing up. It's Friday. Hope you had a good trading day. Unless you got here early, I doubt you had a chance to make a whole lot of money. But anyway, I'm going to wrap it up. This is Mac with PriceActionTradingSystem.com, and we'll see you next time.